SpaceX might just be the company that changes humanity forever. I mean, we're talking about a business that could absolutely dominate rockets, satellites, global internet infrastructure, basically the entire new space economy. But here is the massive contradiction sitting right at the center of the largest stock market debut in history. When you buy into the SpaceX IPO, are you getting a once-in-a-generation opportunity? Or are you paying today for a future where literally everything has to go perfectly? See, the biggest question we need to answer in this explainer isn't whether SpaceX is an amazing company. The engineering, it's undeniable. But as any seasoned investor will tell you, an amazing company does not automatically mean a great stock to buy, right? The price you pay fundamentally dictates your return. And wow, the price they're asking for is absolutely staggering. SpaceX is targeting a $1.75 trillion valuation on listing day. To put that massive number into perspective, if it prices at the top of its range, SpaceX will be larger than almost every single public company on Earth. We're talking trailing only Apple, Microsoft, and NVIDIA. So to justify a number like that, we've got to look under the hood. What exactly are investors actually buying here? Well, that brings us to Section 1, 3 businesses in one. Because of a formal merger that wrapped up just months before the IPO, retail investors aren't just buying a rocket company anymore. You're actually buying 3 distinctly different businesses, all jammed under one ticker symbol. And the contrast in their financial realities is pretty stark. Check out these segments. Starlink, it's an absolute cash cow, pulling in $4.4 billion in operating income. But then you have the space segment, the actual rockets, which burned over $650 million to fund Starship development. And finally, there's the AI segment, which includes XAI and X. That one is a massive money pit right now, generating a $6.4 billion operating loss. So the AI segment is literally consuming all of Starlink's profits and then some. So when you strip away the whole sci-fi narrative and just look purely at the math, the core of the SpaceX investment thesis right now actually isn't rockets at all. Notice that massive chunk of the revenue mix? A full 61% of the company's entire 2025 revenue comes straight from Starlink. Let's dive into Section 2, the Starlink cash machine. This brings us to the absolute strongest bull case for the stock. If you want to understand that trillion-dollar valuation, you have to stop thinking of Starlink as just satellite internet. Instead, start looking at it as a highly profitable, global software-as-a-service broadband monopoly. The growth here is explosive, guys. Starlink generated an incredible $11.4 billion in revenue in 2025. That's a 50% jump year over year. And they're scaling at a completely unprecedented rate, projected to hit 10.3 million global subscribers across 164 countries by early 2026. Basically, they're trading early unit economics for massive, sweeping global penetration. And this perfectly illustrates exactly why Wall Street is practically drooling over this division. It isn't just that $4.4 billion in operating income, it's the 39% operating margin. That is a deeply healthy, highly profitable tech business, essentially hiding inside an aerospace company. The absolute most crucial point is captured perfectly in this breakdown of the S1 data. It says, once the constellation exists, each new subscriber adds revenue at near zero marginal cost. Let that sink in. This is the ultimate engine behind the bull's trillion-dollar dreams. You build the infrastructure once, up in space, and every new user practically falls straight to the bottom line. It's just an incredible setup. Moving on to Section 3, the Starship execution risk. But here's the catch. To build out the future of Starlink, and honestly to justify the rest of that massive valuation, we have to talk about the elephant in the room, the biggest risk factor, the completely unproven Starship rocket. Now, Starship's primary goal is mass abundance. By achieving full and rapid reusability, Starship aims to bring the cost per kilogram to orbit down from over $3,000 on a Falcon 9, wait for it, to an eventual target of just $67. That would completely dismantle how humanity designs spacecraft, because suddenly, weight doesn't really matter anymore. But getting there, well, it's costing an absolute fortune. The S1 filing reveals that SpaceX has burned over $15 billion developing Starship so far. To put that into context, they spent roughly $400 million developing the Falcon 9. So yeah, Starship is a totally different beast, and it's consuming the vast bulk of the company's development spending. And despite the totally incredible test flights we've seen, actually catching the Super Heavy booster mid-air, there are massive execution hurdles remaining to reach the thousands of launches per year Elon Musk is promising.
They still have to master in-orbit refueling with cryogenic liquids. Plus, just one single launch requires 244 tanker trucks of natural gas and 1 million gallons of water just to suppress the acoustic vibrations. Oh, and that grand vision of launching thousands of solar-powered AI data centers into orbit? As of right now, that is completely unproven tech.
Which brings us to Section 4, priced for absolute perfection.
This transitions us directly into the bear case. And look, the bear case isn't that SpaceX is a bad company, not at all. It focuses purely on the math. Look at these multiples. Investors buying the IPO are paying an implied 92.1 times price to sales multiple. Compare that to the top 5 largest US tech companies, which average a 12.2 times multiple. So you're essentially paying a 7.5-fold premium over the most successful established tech monopolies in the entire world. Analysts at Morningstar recently pointed out the massive disconnect this creates. At $1.75 trillion, the IPO price basically assumes that incredibly difficult engineering feats like immediate, reliable Starship reusability and successfully scaling commercial AI data centers in orbit are already guaranteed. It bakes in flawless execution from day one. If there's a delay with Starship or a regulatory hurdle or a catastrophic test failure, there's almost zero margin of safety for the investor. In fact, Morningstar actually ran a probability-weighted valuation, and even when they gave SpaceX the benefit of the doubt in their absolute most optimistic moonshot scenario, their fair value for the stock came out to just $63 per share. That is a brutal 53% discount to the $135 IPO price. Their conclusion is that while the core space and connectivity businesses are super solid, you are essentially paying a massive, expensive premium today for a really long list of future ambitions. All right, let's wrap this up with Section 5, the final investor verdict. So where does this leave you, the retail investor, looking at that ticker symbol right now? Well, if you're a short-term investor hoping for a quick flip on the IPO hype, historical data strongly suggests caution. Research shows that retail investors buying at the first day close start from a structural disadvantage, historically underperforming the market by 20.5% over 3 years. High-volume IPOs almost always see this initial euphoria followed by a harsh reality check. Now for the long-term investor, the smartest play might just be patient. Wait for the initial volatility to settle. And when you're watching the stock, don't just track subscriber counts. You need to watch the Starship flight cadence to see if they can actually reach mass abundance. And keep a hawk eye on the AI segment's capital burn to make absolutely sure it doesn't sink Starlink's profitability.
Ultimately, SpaceX is an extraordinary history-making enterprise, no doubt about it. But the market sets the price, and right now, that price demands sheer perfection. So before you buy, you really have to ask yourself one question. Are you investing in a highly profitable telecom cash machine today? Or are you overpaying for a Mars colony that hasn't even been built yet? Keep an eye on those margins, watch those Starship tests, and whatever you do, don't let the hype blind you to the math.